someone was asking about possibility of getting a beginner's type course. Okay, so we'll just go through some of those basics and then see how far we can go. I'll probably do just like 30 minutes or thereabouts, or 45 minutes. Okay. So what are the things you need as a beginner Forex trading? One, you need to know how the market moves. That is very important. Understanding the basics of your market structure. So whether it's in stocks or crypto or whatever type of market that you are in, you need to understand how market moves. And if you watch previous videos that I've talked about how market moves, we said market doesn't move in a straight line from a point A to point B. Rather, what it does is to push up a little bit and pull back, then push up again, breaking structure there, pull back again, and push up there, have a break of structure, pull back, and then push up again, have another break of structure. So we say price is pushing up, making a series of higher highs and higher lows right there. Okay, these lower levels here are your higher lows. Okay, these levels here are your higher lows. And market repeats this over and over and over again, over a series of trades. Right? Let me see. Okay, so we're good to go. So if you have any questions, please put it in the chat box. Okay. So as a beginner trader, you need to first know, how does the market work? You need to know that learning to how the buys and sells happen. You need to know that. Some people will say demand and supplies or the news structures, but just know that price moves. It does not move in a straight line, and then it moves in waves of. So if it's moving up, you're expecting higher highs and higher lows, or higher, or when it's moving lower, you're expecting lower lows and lower highs continuously like that, and it repeats itself over and over again. Okay. The other thing you need to then learn is that there are trading platforms. So just like when you want to buy a stock physically, now when you want to buy a stock in the stock market, you do not go directly to the stock market as a retail trader. So what you do is to go through a broker, a certified stock broker or a stockbroking firm. Okay, so the same thing for our trading. We need to go through Forex brokers, and they will give us their various trading platforms. Some of the popular ones are the MT4 or MT5. You have Trading View. You have C Trader. There are so many trading platforms. Okay, there are so many trading platforms. So it will be dependent on which broker you're using, and they will then give you that their trading platform. Okay. Now, once you learn how price moves, and you've known that price moves, if it's moving up, if it's trending upwards, it goes in a series of higher highs and higher lows. And if it's trending downwards, so let me just write that down here. If it's trending upwards, it has a series of higher highs, higher lows. And if it's trending downwards, it's a series of lower lows, lower highs. Okay, that's what we just drew here earlier. A series of higher highs, higher lows for your uptrend, and a series of lower lows, lower highs for a trend downwards. Now, when market is not making a series of higher highs and higher lows, it is said to be moving in a sideways fashion. So you see something like this, it's just moving, what some people will say, ping pong type thing. So it just moved to a high, then to bounce back downwards, to move up again, and then bounce back downwards. It will move down again, and then move up again, just bouncing between a range. Okay, or people will say it's consolidating. Okay. So we've talked about how market moves, we've talked about your trading platforms and your brokers that you need to have. And it's very important, though we'll mention it as well later, please do not start with a live account. It's usually better for 1 week or 2 weeks, just test it on a demo trading account. Don't use your live money yet. Trade with a demo account. And in fact, as a bonus, we have what we call prop firms now that will give you an account for a small fee and a small challenge that you do, and then you can exponentially grow your account. Instead of using your own funds, you just use small portion. There are some accounts that I can get for $32. Higher ones, of course, will cost a bit higher, but $100,000 account in some of those prop firms is less than $500. Okay, some just less than 600, but generally speaking, that's the range between 5 and 6. Okay, but you can start off with as little as $32. I think there are some that are even less than that. Okay, you can get an account, a reasonably priced account. I think it's probably a $5,000 account or a $6,000 account. I don't remember now on which of those prop firms. Okay, they can get something like that. Okay, now the next thing we need to talk about is your risk management. So first, you need to know how the market moves. Then you need to know that even though you know how the market moves, you then need to apply risk management to your trades. So, and that has to do with the capital that you're trading. So, for instance, if you're trading with a prop firm, you will hear that generally speaking, some of those their accounts, they will say you should not lose more than 5% in a day. So you can say to yourself that, okay, I'm going to target not losing more than 3%, which is even less than their own target. Okay, so you can use that conservatively and say that for your trading, you're going to be trading a maximum of 3 times in a day. So you can split this 1% each. So for each trade setup, you just trade 1% on each trade setup. That way you are managing your risk on your trading plan. Okay, well, we'll come to trading plan later, but this is part of the trading plan. So first is to know how market moves. Then next, you need to know that you need to apply risk management. Okay. This other part here is candlestick patterns. Okay, you need to learn those ones. There are popular websites. Babypips.com has something like that. Baby Pips with a Y there. Babypips.com. You can check that out. On our general platform, I've also posted a link to my mentor's website. Is on a school platform. So some regions, you need to use a VPN to access it. For some other regions, you can access it directly. So that link is on our platform. So please look out for that link and use a VPN or if your region is not restricted, then you can just go straight to that platform and look through the free course that he has there. It's a full-fledged course. Okay. So you learn all about candlesticks, patterns, support resistance, and all those stuff, right? You can, if you want to add these other bits. I don't use them. At the beginning, I used them, but I don't use them anymore. Moving averages or RSI or MACD, all those ones are indicators, okay, that you can apply to your charts. But at the same time, you can just use pure price action without using, because the thing is that even all this, your RSI, your MACD, they're all derivatives of the price action, of how price is moving when it's making these higher highs, higher lows, or when it's making lower lows, lower highs. They get their setups from that. So if you have learned these price movements, then you don't necessarily need other indicators as well. Okay, so talking about entries. So for instance, if price is moving up and you have higher highs and higher lows with a break of structure. So let me just do this first part here. Just this first part. Okay, just this first part here. So price moves up, comes down, moves up. It breaks structure there. Where do you think would be a good place to enter for a buy, given that price is pushing up? Would it be, let's say, down here? Let's say this is 1. Or up here? Let's say anywhere there. Or 3. So let's say 1, 2, 3. Those 3 levels. Where do you think it would be good for you to place your entry for a buy? Right, wonderful. Thank you. That's a good one. Any other? So somebody has said 2, level 2. Is there any other place? Any other opinion on what our good entry will be? Okay, beautiful. 2. Yes, very good. Very good. Okay, we're getting excellent students here. So thank you very much. So yes, you can actually, so technically speaking, when you have something like this with a break of structure, you can enter anywhere between these highs here and these lows here. But the very best place, very, very best place is this 2 here. When it comes down, when it pulls back to this level and then goes up again. Okay. Number 1 will be an invalid trade. Why do we say it's an invalid trade? It will be invalid. So if I draw that again here, if price pulls all the way down below this last higher low, once it breaks that, then it's no longer a valid trade to the top side because it has broken the structure. Okay, that's how you have to look at it. That if you put a trade down at the lows there, it's an invalid trade. It is no longer following the structure. It has broken structure, and hence you may just get a pullback, a small pullback, and then the thing will drop. Okay, so number 1 will not work. It's outside the range. And then our number 2 is our ideal spot. Number 3 is okay, only that you have a bigger stop loss. All right, but number 2 is ideal. Okay, well done. Thank you all. That's very good. So that is that about chart analysis. Okay. The other part now is your trader psychology. That is very, very important. You need to know what you are thinking by the time you are trading, your emotions. When you enter a trade, are you now saying, oh, so when you enter a trade, let's say you enter somewhere in the middle here, when it pulls back, you enter and, okay, no, I didn't want to push it up. Okay, so price comes in, you enter the market, and then it pulls up a bit and then starts going down. When it's going down, what are the things you are thinking? What are the things you are thinking at that point? You have your stop loss, say, somewhere there. Let's say it even comes down to almost maybe like 1 pip to your stop loss. Are you going to say, I'm going to close this trade? Or are you going to say, okay, let me leave it because I'm using proper risk management. This is only 0.5% of my account. I'll leave it. Let's see what price will do. And then price starts going up. Now, by the time it's going up and it pulls back down and it's continuing to go up, pulls back again and goes up. It's just going up and up and up. Are you going to take profits? Maybe take profits here or take profit here or just leave it. You say, let me see how far it will go. And then it goes to a certain level and then does this, a sharp push down. Right? So you see various things happening while you're in the trade. First, when it was going down towards your stop loss, you were afraid that perhaps it will hit your stop loss. Then, when it started going up, you started getting greedy again. It started getting greedy that, let me see, I want to see it just move. Meanwhile, your stop loss is right at the lows there. You didn't move your stop loss. And then suddenly, maybe there was a news event. And then this just pushes everything and then stops you out. Meanwhile, maybe you have done something like 1 to 5 here already. So in terms of dollars, for instance, if it's a dollar-based account, so if you're risking $100 here, maybe you've done 500 already. Okay, but you said, let me see if it will go to 1,000. You are just waiting. You want it to go to 1,000, which is okay. But then once it then breaks to the downside and stops you out for minus 100, what are you going to be feeling at that time? You start blaming yourself. I could have, I should have, I would have. You know, you are using coulda, woulda, shoulda, right? Those are the emotions you need to take care of. You need to be able to say to yourself that this is how I'm going to trade. And that ties in very nicely with your trade plan. You need to have clear rules. So just like the business gurus will tell us that you must have a trade plan. And like I say, I've mentioned this before, but I'll mention it again. Your trade plan should have 3 aspects to it. It has your strategy, it has your risk management, and then it has your trader psychology. Right? It has your trader psychology. So in your strategy, you have clear entries. Where are you going to be entering the market? Where are you going to be exiting the market? You need to have them clearly defined. Because, you know, your mind, the human mind, wants clarity in anything. If you say that, okay, so I'm in Nigeria right now, and I'm in Lagos. So if I say to myself that I want to go from Lagos to Abuja, okay, from one town to another, I need to be clear in my mind how I'm going to get there. Am I going to go by boat? Am I going to go by a car? Am I going to go by air? Right? How am I going to get there? My mind needs to be clear. If I'm saying to my mind, oh, I'm going to go by boat for a certain portion of the road, then I'll change to a car, then I'll take a plane. My mind needs to be clear. At what point are we going to be using those various options? Right? And then I need to also say to my mind that, okay, perhaps this is the kind of range, the time range I expect that I'm going to implement or use these things. So you need to be clear in your mind. What is your strategy? You need to be clear on your entries. What is your entry? You need to be clear. If today, so what we're getting at here is that first, you need to be clear about it, about your entry. And in being clear, you then need to be consistent. Let me put consistent there, just con, okay? Or let me put ST there. You need to be consistent in your clear trading strategy. You need to be clear and consistent in how you apply it. That is where you get your edge in the market. So if you say in your trading up like this, in an uptrend, if you are going to be taking trades in your number 2 here, that your number 2 range, you remember? So always, every time you are waiting for that number 2 zone to happen, okay, you always wait for that, and you do that consistently. And if it's a downtrend as well, you're waiting for price to pull back into your number 2 zone for you to enter. If you are doing that consistently on all the trades you take, that is when you get your edge over the market. Not that today you are using number 2, tomorrow you use a different method. Maybe you don't even enter on a pullback. You are just entering right when you see this break here. You enter right there. Then next tomorrow, you even bring it down to number 1 here. You enter there. Maybe for some strange reason, you are lucky that price just decides to turn around at that point. You are trading randomly. And when you trade randomly, you will get random results. So we want to be consistent in the way we trade. It's okay for you to say that, okay, sometimes my A trade, for instance, is for me to enter at number 2, but my B trade is for me to enter at number 3, which is somewhere at the top there. So if you say in your trade plan that you are taking both A and B trades, if it occurs, then you're already clear in your trade plan that this is what you're going to be doing. So you be consistent with that. You take either A or B, and you have clear rules as to when you take your A setups or when you take your B setups. Or you say to yourself that, okay, in my trading, I do not know when I will get an A setup or where I'll get a B setup. Whichever one comes first, I will take it. So if I'm risking 1% per trade, I can break it into 2 further and say, my first trade, if it's at number 3 area, I'll use 0.5%. If it comes all the way down to my number 2 area, where I have an even better entry, then I'll use another 0.5 there. So you're still risking just 1%, but you have broken it down and put it in your trade plan that you take both A and B trades. And you trade like that in a consistent manner. So you have to be clear in your mind. How are you going to be trading? You need to be clear in your mind. That needs to be clear. So we talked about having that trade plan and saying that your trade plan has those 3 aspects to them: the strategy, the risk management, and the trader psychology. Very, very important. Very, very important. You need to go over this over and over and over again. And we wrote there that your trade plan brings discipline and consistency. And this is all you need for your long-term success. This is all you need. There's no trick to trading at all. There's no magic whatsoever to trading. Once you have a clear plan and you stick to that clear plan, you do it over and over and over again. In one of our older classes, we talked about it. In fact, let me just go through it very briefly here. We said, look, go to Google, to your Google chat, or not Google chat, Google search engine, and just type in trading strategy. You see 1,000,001 trading strategies. Just pick one. Pick anyone and understudy how it flows. Understudy the rules. So write out the rules for yourself. So you don't even need to reinvent the wheel. There are 1,001, there are 1,000,001 different strategies. So just take one and start applying that one. Don't mix and match, right? And we even went further to give you engulfing candles. At some point, we talked about applying zigzag indicator to your chart. It's all in those free videos that we posted on the platform, right? So we have given you strategies, we have given you risk management plans that you can implement, and that is all you need. Then you begin to take care of your trader psychology. Begin to take note of what you're doing. Are you in a fear mode or in a greed mode? And to make it worse, you then apply impatience. Your trade has just shown you a movement from here to here. You have not seen any structure. There's no break of structure. There's nothing. And then you decide to enter. On this pullback here, you just enter, bam. There's no structure because you are not following a trade plan. So you need to be able to follow your trade plan every time. You must follow your trade plan. Wait for that break of structure. Once you see the break of structure, it confirms that price is likely or price has the potential. Another person will say the price has the propensity to move up because it has shown you a break of structure here. So all you are waiting for is a pullback to your zone where you want that entry, and then you go up with it. So once you wait for your plan to mature, you patiently wait for your trade to set up, and then you take it in a consistent manner, then you will not go wrong. That is all you need for trading, because trading is not complex at all. The key thing you need is direction. So once you have your trade plan, which has those three aspects, your clearly defined entries and exits. So once you know your entry, also define what your exit will be. You need to be clear about that. Define where your stop loss will be. You need to define it. Very, very important. Apply proper risk management. We've just talked about prop firms that will give you 5% to maximum daily loss, and then you aim for 3%. I said in your 3%, you split it into 3 trades, maximum of 3 trades in a day, split into 1% each. And went further to say that, okay, because you want to trade in a certain way, in a certain style, you want to be able to take A trades and B trades. You split this further into 0.5%. That is using proper risk management. All right. So let's see, what other things do we want to discuss? So these are some of the beginner things you need really to help you to trade. And there are many information. You can get so much information free of charge. We have put it on this platform and can get so many information on YouTube. But the ones we have posted here on this platform, it's not just random information. There are information that will actually help you get started. And then if you've already started, there are also information there that will help you manage your risk properly, look at your trader psychology, and then you are in the right frame of mind, and you're able to apply that consistently over a series of trades. And then you begin to hear us say something about focusing on the process. Focus on the process. Okay? Don't mind my writing, no. You need to focus on the process, not on the dollar, not on the dollar amount. Because some of us, you once you see a trade and is a valid trade, instead of using proper risk, you now over leverage, and then you don't know if that price, what's it called now, that particular price action will then go on further down to break out in the other direction, because that will happen. Even if in the first trade you over leverage, so let's say on $1,000 account, you are risking $900. That's 90% of your account. And then that first time you do it, it goes boom like that in your direction. And then you triple or even quadruple your account in one trade. Then you begin to get so excited. You begin to tell yourself, I'm going to hammer, right? And then the next trade. So you've made how many percentage here? So your $1,000 account is now, let's say, like $5,000 account, for instance, just from one trade, because you reached 90%. Now, next time, this is your $5,000 account now. You see the same setup. And then on this pullback, you enter another 90%. And this time around, price decides to go down. And then you lose all that progress you've made. That is what we call random trading, not following your process. You need to follow your process every time. Focus on the process and not on the dollar amount. All right. So that is it. Do you have any questions? You can raise your hand if you have any questions, or mute yourself and talk if you want to ask any questions. Billionaire Thomason, you want to ask a question? Oh, okay. Is it clear what we discussed now? Is that clear? Oh, I see. Okay. No problem at all. Beautiful. Thank you, ma'am. So that is it really. And it is these basics. So, let me even tell us this now. So if you are starting out, we are billionaires here, right? How do you bring in the billions? Right? How does it come in? Is most likely, typically for many of us and for many people around the world, you won't just wake up one day and you just see billions. It doesn't happen that way. Thank you very much. So it will start with that $1. So today, you trade properly and you make $1. Tomorrow, you keep to that same strategy. You make another $1. That's true now. Next tomorrow, you are just keeping it. Using why we say you should be consistent. Use a consistent process. Be clear about it, and you're consistent with it. So next tomorrow, that your $2 becomes $10. By the end of the year, that your $1 that you started with is probably, let's say, 100. Just to be conservative, right? Let's say 100. And then the next, when you start the following year, you take your 100, take it to 1,000, right? And then you continue that way. You keep compounding using the same process over and over and over again. Very soon, in, let's say, well, when you're able to scale, okay, that's the other thing now. So you're starting small. Maybe you start with a prop firm and start with a $5,000 account. So as you're making progress, right, you go to a $50,000 account. You're making progress, you go to a $100K account. You're making progress, you go to $200K account, right? And you're making, let's say, 1% or 2% or whatever that percentage is on a consistent basis. Then you begin to compound that. So just as you are making initially just small amounts, what looks like a small amount, very soon you are able to scale it. So you then have, let's imagine that you have 10 different prop firms with 100K accounts. That's already $1 million. And then let's say on that $1 million, you're just making 10%, right? Within a year, if you're doing 10% a month, you have already doubled it. You have already made over $1 million. Then by the following year, what do you think you are making? Right? So that is how it is. But let's not even go there just yet. Start small and build it. That's what we're saying here. That is how those billions will come in. So don't be in a hurry at all. Get the foundations right. Get your trade plan. That's what we said here. Get your trade plan, which has your strategy. Be clear about it. Be clear about your risk management. Be clear about your trader psychology, that you will not be greedy. And when you notice that you are greedy, adjust yourself. When you notice that you are trading with fear, maybe fear of missing out, and then you enter any random trades, right? You are careful with those trader psychology things, right? You are careful with those things as they are happening. You are responding appropriately to them. That is how you make your billions. Your billions won't just come, bam, like that. You won't just wake up and see your billions, just like that. No. Majority of the time, what we expect is that you take your small $10 and you scale it. It will go to 1,000 one day. Very soon, that your 1,000, you scale it again. It will go to 100,000. Soon, that your 1,000. And mark you, as you are scaling, the period that it takes for you. So if it takes you a whole year to go from $1 to 100, it will not take you a whole year to go from 100 to 10,000. No, it will not take you, because now you've understood how the business works. It's like a system, just a machine running by itself, right? So it will take you a shorter period to replicate it. So you need to put this in perspective every time. Put this in perspective. That is how you make the billions. Get your trade plan, like we said up here. Get your trade plan with your strategy, risk management, and trader psychology. And just follow that. Believing in yourself that, yes, those billions, you will see the physical manifestation, right? And in fact, oh, people, do you know that you are not, how will I put this now? So imagine they just gave birth to you right now, today, right? When they give birth to you, everybody will say you're a baby, right? But in your own mind, you can see 10 years, 20 years, 30 years down the line already as you're growing up, right? You are not adding any new things to yourself in terms of you're not adding new hands, you're not adding new legs, you're not adding new nostrils or mouth to yourself. You already have everything within you. That is the same way that it is in the intangible world. You are already a billionaire. What you are now doing is that you are growing physically into that billionaire and manifesting that billionaire physical thing, that thing they call billionaire status, because you are already a billionaire. So when you have a baby, that baby is already an adult within itself, within themselves, right? They're already an adult, but that adult's physical manifestation will not show there and then. It's going to take time. You know, as they learn, they go to school, they do that, and then over years, you now say, okay, you graduated from baby into adulthood. But right from the time they gave birth to them, they already have everything within them. Because as they grow older, they're not going to add new legs or new hands or new heads. No, it's the same structure. It's just going to grow. It's just going to expand. That is how you are as well when we're talking about money. You already have all the resource you need in this life. You already have everything within you. So begin to build it up. Begin to develop it. And it is when you develop it that you begin to see the physical manifestations. Right? It's when you develop it that you begin to see that physical manifestations and physical, what do we call it now? You will see you will see the results, because billionaire getting physical billions is just a manifestations of what has happened within you already. Okay, so that's it for today. Do we have any questions? Thank you, Mrs. A. All right. Okay, so if we do not have any questions, we will call it a day. And we trust well, next week when we meet again, we'll have another hot topic. Maybe we'll look more at risk management next week. Okay. Beautiful. Thank you all so very much.
Thank you. Thank you so much. God bless you, sir. Good night.
Thank you.